There's one mistake that destroys more traders than almost any strategy failure. And the scary part? Most traders don't even realize they've made it, because the consequences don't show up immediately. They show up weeks later, months later, sometimes years later. And by then, the damage is already done. Today, we're talking about the mistake most traders never fully recover from. The obvious answer is wrong. Most people think the biggest mistake is blowing an account, taking too much risk, ignoring a stop loss, making one terrible trade. But those aren't the deepest mistakes. Those are symptoms. The real mistake happens earlier, much earlier, and it changes how a trader thinks, how they act, how they approach every future opportunity. The mistake revealed. Here it is. Most traders never recover from losing trust in themselves. Not losing money, not losing a trade, losing self-trust. Because once that happens, everything becomes harder. Every setup feels uncertain. Every decision feels heavier. Every loss feels bigger. How it starts. The process is subtle. You follow your plan. A trade loses. You follow it again. Another loss. Then another. Now doubt appears, and doubt begins asking dangerous questions. Maybe my strategy doesn't work. Maybe I'm not good enough. Maybe everyone else understands something I don't. At first, these thoughts seem harmless, but they grow. The breakdown. Once trust starts disappearing, behavior changes. You hesitate before entering. You exit early. You skip good setups. You constantly look for confirmation. Now you're no longer executing freely. You're trying to protect yourself from being wrong. And that protection creates inconsistency. The very thing that destroys results. The paradox. Here's the paradox. The more you doubt yourself, the worse your execution becomes. The worse your execution becomes, the worse your results become. And worse results create even more doubt. Now you're trapped in a loop that many traders stay stuck in for years. Why this mistake is so powerful. Money can be recovered. Accounts can be rebuilt. Strategies can be improved. But self-trust, that's harder. Because self-trust affects every decision. Legendary trader Jesse Livermore understood this. He knew that confidence wasn't built by avoiding losses. It was built by trusting your process despite losses. And that's a critical distinction. What most traders do wrong. Most traders respond to doubt by searching. New indicators, new mentors, new strategies, new systems. They're looking for certainty. But certainty isn't what they're missing. What's missing is trust. Trust in their rules. Trust in their process. Trust in themselves. And no indicator can provide that. How professional traders think. Professional traders think differently. They don't measure themselves by individual outcomes. They measure themselves by execution. A losing trade doesn't automatically mean failure. A winning trade doesn't automatically mean success. The question is, did I follow my process? As trading psychology expert Mark Douglas taught, the goal is consistency of behavior, not certainty of outcome. And that mindset protects self-trust. How to rebuild trust. If you've lost trust in yourself, start small. Stop focusing on profit. Focus on execution. Make one promise. For the next week, follow your rules exactly, not perfectly, consistently. Because self-trust is built the same way it's lost. Through repeated actions, one decision at a time. Closing. The mistake most traders never recover from isn't losing money. It's losing trust in themselves. Because once trust disappears, consistency follows. And without consistency, no strategy can save you. Protect your self-trust. Protect your process. Protect your discipline. Subscribe to Mind Over Markets, because profitable trading starts long before the trade. It starts with believing you can follow your own plan.